Chinese stocks make a slight recovery after falling to 6-year lows. Boeing workers halt aircraft production as they embark on a strike. And we look at the impact of Australia's decision to suspend operations at key lithium mines in China. Hello, I'm Taiba Aiden with the latest business and finance news here on TRT World. Asia-Pacific markets displayed mixed results as China saw a mild rebound, while Australia continued to edge closer to an all-time high. Investors are assessing inflation reports from India, which show rising pressures that could impact regional monetary policies. The CSI 300 index in mainland China saw a slight recovery, rising marginally from its 6-year low on Thursday. Analysts are cautiously optimistic, monitoring whether this rebound will signal a sustained recovery. Australia's S&P ASX 200 index gained 0.21%, nearing its all-time high. Australia's strong performance contrasts with other Asia-Pacific markets. Investors are eyeing sectors like commodities and financials, which are driving the market's upward trend. Meanwhile, India's consumer price index rose 3.65% year-on-year in August, higher than both July's revised 3.6% and economists' expectations of 3.5%. Rising inflation could lead to tighter monetary policy, impacting market sentiment across Asia. The inflation surge adds pressure to India's central bank to navigate economic stability while maintaining growth momentum. Let's get more on this now with Nadia Al-Bilasi in Dubai. She's a senior market analyst at Equity Group. Hi there, Nadia. Now, how significant is China's rebound from its 6-year lows for investors?
Hi, Taiba. Thank you for having me. I think there's a real wide issue with China's economy right now. We've been getting a lot of negative data, and despite CPI rising slightly than the levels that we saw in July, still they are facing consumption issues, and the Shanghai Composite is actually is really pressured at these times, and also the country is struggling with foreign investments as major banks also try to pull out of all the investments that they had in store for China and going to different kind of emerging markets than China. So I think now it's basically we're just going to be looking for any economic indicators that should support or help boost expectations for China. But I think so far, it definitely has been dented, and this was reflected by the poor economic indicators that we've been seeing all throughout this past week.
Let's take a look at India now. With rising inflation, what impact could this have on the economic outlook for India?
So I think there's definitely going to be a change in monetary policy. I think the Republic Bank of India was supposed to, or as markets widely anticipated, that we're going to see the start of the easing cycle starting December. But now as inflation grows and is expected to even grow further, this is going to really pressure the Republic Bank of India. And I think that just as CPI grows from 3.60 to 3.65, and in September, in the next month, it's expected to also grow further in the end of September. Also, amid schools and it's already higher food prices, and now with school starting, I think inflation is bound to pick up again, which is going to put the Indian bank in a really tough spot to change its monetary policy.
Right, and there are also reports of Samsung workers striking in India. How might this impact its stock performance and operations currently?
Definitely, it could impact the Nifty, and basically Samsung accounts for at least a quarter of Korea's GDP. So it's not going to be great for Samsung stock either. And I think just workers, they want better working conditions and they want higher pay. And I think with even despite rising inflation in India, there's still a problem with higher wages. I think that workers are taking still lower wages. We haven't seen inflation pick up because of the wage growth, but only food prices.
All right, Nadia Al-Bilasi, Senior Market Analyst at Equity Group. Thank you very much as always.
Thank you for having me.
Now a quick look at some of the other top business stories from around the world. Shares of Trump media fell again on Thursday. The stock dropped 3.6% to its lowest at $16.07. The drop follows the US presidential debate between Donald Trump and Kamala Harris. Trump media stock is down almost 60% since July. The media group is the parent company behind the social media platform Truth Social, with Donald Trump holding 57% of its shares. Warren Buffett's $13 billion bet on Occidental Petroleum is turning sour. Oil prices have hit a 3-year low, causing the company's stock to drop 29% since April. It comes amid high oil supply and lower demand. Buffett bought millions of shares when prices were higher. Now the stock is trading just above $50. US mortgage rates have fallen to their lowest level since February 2023. The 30-year rate is now 6.2%, down from 6.35% last week. Although rates are lower, home sales have not increased. The number of people applying for mortgages is still low. The pending home sales index also fell in July to its lowest point in over 20 years. And Alibaba's shopping app Taobao has launched an English version in Singapore using AI to help non-Chinese users. The app quickly became the top app on Singapore's App Store. AI translations make shopping easier but have some issues like currency problems. This update is part of Alibaba's push to expand globally. Singapore and Malaysia are the first countries to receive this feature. Still to come, UK Prime Minister Keir Starmer defends winter fuel pay cuts, stressing spending control for future growth despite criticism. That and more after this short break.
Stalin killed thousands and hundreds of thousands of people.
Became a politician, activist, head of Oxfam, head of
You're talking about me.
UNA.
She
She sounded great, didn't she?
It's about democracy in 2023 in the world. It's the world 2023. I like that.
I didn't realize your audience was so deep.
Oh, well, I mean, I hope they are.
The Interview on TRT World.
The UK government has passed a controversial plan to restrict winter fuel payments to only the poorest pensioners, sparking heated debate. The decision has raised concerns about how it will affect millions of elderly people. Dominic Bryan Omondi has the story.
As temperatures drop, so too will support for millions of British pensioners. This week, the Labour government pushed through a vote to slash payments given to those who struggle to pay for home heating during the coldest winter months. The vote was a controversial one.
If the Prime Minister was a pensioner earning $11,350 this year and receiving no winter fuel payment, what would he prioritise this Christmas? Heating or eating?
Prime Minister Rishi Sunak has demanded an assessment on how the cuts will affect pensioners living in poverty. Current Prime Minister Keir Starmer blames the previous government's spending.
They've left a £22 billion black hole. Responsibility for this decision lies there. The only way to rebuild our country and invest in our public services and make sure everyone is better off is if we clear up their mess and deal with the £22 billion black hole.
Despite calls to rethink the decision, which affects around 10 million pensioners, Starmer remains unmoved. He insists that tightening the budget is the only way to create room for future investments and economic growth. This year, only about 1.5 million pensioners will receive the winter fuel payment. It's a significant drop from the 11.4 million who were eligible before the change. For the 10 million pensioners losing the payment, the sting is softened by a 4% increase in pension starting in April, which will boost the full state pension by $510 annually. The reduction in winter fuel payments is set to save more than $1.8 billion this year, contributing to efforts to address the deficit inherited from the previous Conservative government. Critics argue that this was not what voters expected from Labour, which made no mention of cutting fuel payments during the election campaign.
I thought that socialism was about taxing those with the broadest shoulders in order to help the most vulnerable. But it appears that Starmer socialism involves scaring those with the broadest shoulders out of the country while taking away the winter fuel allowance of frail 90-year-olds living in drafty homes.
For many, the burning question remains, will this tough decision help the economy or leave vulnerable pensioners out in the cold? Dominic Brian Omondi, TRT World.
Joining us now from London is Russ Mould. He's Investment Director at AJ Bell. Good to have you back on the programme, Russ. Now, how will these cuts to winter fuel payments impact pensioners who are already struggling with the rising cost of living?
Yeah, I mean, that loss of £300 for those 10 million people is a potentially significant percentage of the UK state pension, which this year has been running at around £11,500 and will rise to £12,000 next year. It is a potentially big chunk of their income at a sensitive time after the cost of living crisis, and that's why it's caused such heated debate publicly, in Parliament, and at a trades union conference that's been taking place on the south coast of England this week.
Right, and given that 10 million pensioners are losing this support, how effective is this 4% increase to pension funds softening the blow?
Yeah, I mean, that will add around £460 per pensioner. But as a former pensions minister, Steve Webb, has stated, and he used to serve under the Cameron-Clegg coalition, once you adjust for tax, you adjust for the loss of the winter fuel payment and the forecast for inflation, then it will still leave an awful lot of pensioners potentially worse off in real terms. And again, that's why it's been such a heated topic for debate.
Right, and Keir Starmer has said these cuts are necessary. What alternatives could the UK government consider to balance the budget without impacting vulnerable pensioners?
Yeah, I mean, the Prime Minister's looking at the aggregate deficit, which is nearly 100% of GDP. The country's interest bill is £100 billion forecast, according to the latest budget from March. That's more than Britain spends on defence. So he's looking to try and find ways of reducing the deficit and reducing the bill, if he possibly can, and maintain credibility, which was damaged internationally in Britain by the very short-lived Truss government. The Labour government have made it hard for themselves by saying they will not increase income tax, national insurance or another welfare tax or a sales tax, and they raise around 2/3 of government receipts. So they're having to look for other things. Austerity isn't politically popular and it's not what they were voted in to do. So they will be looking at either other taxes like windfall taxes or capital gains tax. And really their agenda is to try and generate growth and get the economy to grow out of the debt. But, you know, that's easier said than done.
Right, and how do you think this decision will influence public support for the Labour Party, considering the criticism that it has sparked?
Yeah, I mean, we're still in the first 100 days of a new government. I mean, they won a crushing majority in the June general election. They have 2/3 of the seats in the British Parliament nearly, although they only won 1/3 of the popular vote. So I think that's the challenge that faces this government on a 4 or 5 year view. But at the moment, I can understand why they're trying to get the bad news out of the way now, because they've still got another 3, 4, 5 years in office. And then if they can succeed in getting that growth going, interest rates are coming down, inflation has cooled. So some things economically are going in there in the public's favour, and they'll be hoping to build on that in the coming years.
All right, Russ, we'll come back to you in just a moment, but let's take a look at the latest developments from Boeing. Now, machinists at Boeing have voted to go on strike in another setback for the aircraft manufacturer. Almost 95% of workers from the International Association of Machinists and Aerospace Workers have rejected the contract brought to them by Boeing, which would have raised pay by 25% over 4 years, compared to the 40% sought by the union. The strike by 33,000 machinists is set for Friday. Now, Boeing has struggled to recover its reputation following a series of incidents with its aircraft, including 2 fatal crashes in 2018 and 2019, and most recently, NASA leaving behind 2 astronauts in space due to a problem-plagued spacecraft. The company has burned through about $8 billion so far this year and has mounting debt. Let's go back to Russ now. Russ, how will the Boeing strike impact the company's ability to meet production targets and recover from these recent crises?
And clearly, Kelly Altberg, the chief executive, his job now is to try and find a new deal that will get staff back to work as quickly as possible. Boeing has an order backlog of more than 5,000 aircraft, but it's currently struggling to produce much more than 40 a month. And if its staff are not there at key production facilities in the state of Washington, in America, then clearly those production numbers will go down again. So it is vital for the company that they get a settlement that is acceptable to everybody as quickly as possible.
And what are the key reasons behind the overwhelming rejection of Boeing's latest contract by its workers?
Well, there were a number. I mean, the workers had asked for a 40% pay rise over 4 years. They were given 25%. The workers also want a far greater say in safety issues, where I think there's a strong perception that Boeing has sacrificed safety in terms of profit and in terms of production, which is a perception they're going to have to work very hard to shift. And the unions are also demanding that future commercial aircraft, or at least the next model, continues to be built in the state of Washington in a pushback against the company's outsourcing policy. Now, unemployment in America is still quite low. There has been, a cost of living crisis, and Boeing has major reputational and operational issues to fix, so the unions are currently in quite a strong bargaining position.
All right, Russ Mould, Investment Director at AJ Bell, thank you very much for your analysis. Now, a report suggesting China has decided to suspend operations at one of its lithium mines has sent stock prices of some of Australia's major lithium miners soaring. With Australia already dominating lithium production, this vacuum may see them reign supreme in the sector. Emre Boz reports.
These pools of water are just one way miners extract this key mineral, lithium, used in batteries for mobile phones, laptops and electric vehicles. Australia already supplies almost half of global production at 46%, followed by Chile at 24% and China at around 16%. But there are now reports that battery giant CATL is halting operations at a major mine in China's Jiangxi province. And that has sent stock prices for Australia's major lithium producers surging. In the past 5 days, Australian company Pilbara Minerals saw its stock, which had fallen 32% since the beginning of the year, rise by 12%. And Australian firm Mineral Resources, which was down 50% year to date, saw its stock climb by nearly 27%. That's because earlier fears of an oversupply of lithium are fading. Analysts expect the mining suspension in China may remove between 5,000 to 6,000 tonnes, or around 8%, from the country's monthly lithium production. Not only does this mean good news for the market capital of Australia's mining companies, it also creates a vacuum for these firms to dominate global lithium production even further. Australia has the second largest lithium ore reserves globally. And experts say that the lithium market may generate up to $10 billion a year in revenue for Australia's raw materials industry by 2030, meaning that for Australia's lithium producers, further investments will ensure a lion's share of global supply and the profits will keep coming in. Emre Boz, TRT World.
Let's get more on this now with Tim Waterer in Sydney. He's Chief Market Analyst at KCM Trade. Hi, Tim. Now, what's the significance of CATL's decision to suspend operations in China for the global lithium market, and what does it mean for Australian producers?
Good to be with you. Yeah, that's right. In terms of the news itself, it's really given Australian producers quite a reprieve. The lithium producers in Australia, they've been really under the pump for some time now. The lithium supply last year was up about 40%, and that put a lot of downward pressure on prices, and that impacted the profitability of these lithium companies. So now that we're getting some supply taken out of the market, we're seeing a rebalancing effect. That's put upward pressure on the lithium prices, and that's spelled good news for the Australian lithium producers, as I said, they have been, under a lot of selling pressure year to date. We have seen a rebound, still down over the course of the year. They've been a target of a lot of short selling, some scepticism over the bigger picture on lithium, but certainly, it's been a better week for them on that news that you mentioned.
Right, and given these sharp surges, is this a short-term reaction or is it a sign of sustained growth in the lithium demand?
Yeah, I think there's two components there. I think we will see sustained growth in terms of lithium demand. I think we will only continue to see increasing production numbers in terms of EVs out of China, for example. So I think that demand will still be there going forward, but will lithium prices still remain elevated? I think there's more doubt over that, because as we do see, the demand for it go up as there's more, production of electric vehicles, that'll push the lithium price itself higher, and that in itself could attract more producers to the market and once again create an oversupply potential scenario there. For example, CATL, if they see lithium prices start moving higher again, they might be tempted to come back in, and then we're sort of back to where we started. So, yeah, I still think that there's a bit of a question mark over lithium prices going forward, but the demand outlook still looks quite good, albeit EV sales have been a little bit softer recently. All right, Tim Water, a Chief Market Analyst at KCM Trade. We will have to leave it there. Thank you very much, as always. Thank you. An American billionaire has become the first person to take part in a private spacewalk, hundreds of kilometers above the surface of the Earth, or in the words of the man himself, above the perfect world. Jared Isaacman, who chartered the Polaris Dawn mission, exited the space capsule on Thursday, followed by senior engineer Sarah Gillis to conduct movement tests on the new SpaceX suite. Shadia Edwards-Dashti has this report.
One small step for a privately funded billionaire, one giant leap for space travel, a historic moment for mankind.
Back at home, we all have a lot of work to do, but from here, Earth sure looks like a perfect world.
Down below, ground crew cheered as daredevil tech billionaire Jared Isaacman exited the hatch of his orbiting SpaceX Crew Dragon capsule on the world's first private spacewalk. Against the spectacular backdrop of the Earth, he can be seen carrying out new suit tests as part of the mission. Returning a few minutes later, engineer Sarah Gillis took her turn in space. The 4 private astronauts blasted into space early on Tuesday on a 5-day Polaris Dawn mission.
Looks like our first clear view of planet Earth there, our first of many for this mission.
After an actual launch, spacewalking is considered the most dangerous part of any flight, and until now, the domain of just 12 countries.
This is a major step forward in terms of space travel for humans. It also brings with it incredible risks because a lot of the technology is new. A lot of it has not been fully tested in outer space.
The entire capsule is pressurized, meaning the crew will be reliant on their spacesuits for oxygen. With the void of space as a backdrop, the crew model and test the extravehicular suits. Speaking ahead of the mission, Jared outlined the out-of-this-world ambition.
They know they need EVA capability, the knowledge of the operations and the suit in order to fulfill their long-term dream of potentially populating another planet someday.
SpaceX has these huge ambitions of getting to Mars and making life multiplanetary. And in order to get there, we need to start somewhere.
The mission was box office from start to finish, with a running commentary from Elon Musk on his platform X, taking humans the furthest traveled since the Apollo missions, and, in the words of Musk himself, striving to greater heights. Shadia Edwards-Dashti, TRT World, Earth.
South African President Cyril Ramaphosa is set to sign what some see as a controversial basic education bill into law. The African National Congress says the bill seeks to strengthen governance of the country's education sector. However, the Democratic Alliance, a coalition partner in the unity government, strongly opposes the bill. Grace Courier-Kanja tells us why.
It's a test for South Africa's government of national unity formed in June. The African National Congress and the Democratic Alliance hold most seats in the unity government and have contrasting views on the Basic Education Laws Amendment Bill.
In a multi-party government, leaders need to respect the constraints and imperatives of their partners. And any leader that tries to ride roughshod over their other partners will pay a price, because their time will come when the shoe is on the other foot, and they will need the understanding of those partners in turn.
It is disturbing that whenever there is a dispute, you will hear threats being made to the stability of the GNU. It is disturbing because such threats are not only directed to the president, they're directed to the stability of the country. They are threats directed to South Africans.
The bone of contention is the clause giving the government power to control the school's language and admission policies. Presently, school governing bodies comprising parents and community leaders have the final say.
We believe the bill compromises the rights of children to mother tongue education, and that's why I met the President on Bella, and I really hope that we can find a common way forward. But if the President does go ahead and sign the Bella bill, we will have to consider all of our options on the way forward.
The DA predominantly draws support from Afrikaans and English-speaking people, while the ANC says that the bill could allow children access to the almost 2,500 Afrikaans language public schools spoken by most of the country's white minority population. The Bella bill also seeks to have all children who are homeschooled registered and calls for the abolishment of corporal punishment and initiations. Grace Kuriakanja, TRT World.
Well, that's all your business news for now. Thanks for watching.